Okay, this is Timing Strategies client blog update for Friday, December the 19th. We've been having some problems with YouTube with their uploading and service, so if this does post, great. If not, if anybody does hear any of this broadcast, please give us a call if you know how to fix this, especially if you're YouTube, and we'll be glad to post again. We haven't posted for almost 3 weeks. And again, this is a client blog update only. It's not a recommendation to buy or sell or take any investments whatsoever. It's for communication purposes only. Please feel free, like I said, to give us a call or an email if you have any questions on that. That said, let's get down to brass tacks. Okay, so, and even if this, I'm going to make this short because I don't even know if it's going to post or not. Okay, so on December the 8th, we took off the last of our long positions. We were scaling them out here back on the 24th of November and also on the 26th of November. On the 8th of December, we took all of our long positions out, which was about 40%, which was what was left. And we went short 50% using a basket on the indices, the S&P, the Dow, NASDAQ, and the Russell. So we're short 50% S&P as of the 8th, 50% indices, and we're long 30% precious metals and energy. That's what the E and M stands for, the E and M. Let's take a quick look at how that's working so far. XLE is our proxy for the energies. You know, that was doing reasonably well until ExxonMobil Thursday came out and let gas, and use the OIH if you want. Whoops. OIH, same thing with that. So that's pretty close to what we've got with the Ridex Energy and Energy Services. And again, we've been long 15% using, let's use the XLE again if we still keep that up. We've been long the Energy and Energy Services of 15% as of November the 13th, I believe that's what that arrow indicates. Actually, we bought in 10% there, excuse me, on the 23rd of November, which would be, or no, what was it? No, it was down here. On the 10th or the 13th of November, we actually went 15%. And how I know that is because at the same time we allocated, that's the date right there, November the 23rd, or excuse me, October the 23rd, we went 15% long energy, precious metals and energy. We were long 10% as of here, the 16th of September. And that went our way at first, real neat, and then it went against us, and then so on the 23rd of October, we scaled that up from being long 10% to being long 15%. So that's when we allocated our 15% to the energies and the metals, and so far that's worked out great. You never have enough of your winners. You always have too much of your losers, but you never know what really is going to be what until hindsight. Let's take a quick look. Yeah. Wow, 75% return on the precious metals sector since our allocation of 15%. Geez, I wish I would have just went in all there. And what's really confusing me, is why the energies aren't getting any more of a bump. Why they're not, getting a little more of a ride on the upside with the metals. The energies, I think, are a little more important than the metals, but evidently the market's got its own ideas, so we may add a little more or overweight more to the metals versus the energies because of what's happening as far as the disconnect that is starting to develop, or has developed over the last month. Let's take a look at bonds real quick. Amazing. We went short 20% Ridex inverse government bonds on this day, basically the 28th of November. We took that off. I believe it was a day later. No, in fact, the next day right here, we took it off. We went short 20% on the 26th. On the 28th, we took that long position, that short position of 20% off. It actually started way back here, if I'll show you. We went short 10% here on the 13th, and then it even went back deeper over here. We went short 10% back on the 17th of September. We took that short position off back on the 9th of October with the meltdown in the market. We put that short position back on 10% the 13th of November. We held that short position against us. It's 10% going against us until the 26th, where we increased it to 20% on the 28th, we took that entire 20% short position off. And, that's so far been a good thing, because from the point that we got out of that on the, on the 28th, the bonds have gone against that original or that previous position by about 15%. We are now looking again to potentially get short bonds again using the RIDEX Inverse Government Fund. But let me tell you, this is a bubble. There's several motivating factors with the bond trade. I don't want to go into the fundamentals of it all right here, because this is a short video post and I'm almost done. But again, there's several influencing factors in the bond trade and why rates are going so low and bonds keep going so high. So I don't want to try to fight it. The top is coming. Where the top is going to be, I don't know. Let's just go to the weekly. Is that parabolic? Yes. Can it keep going higher? Absolutely. That's nuts. That's Hank the Skank and Ben Bunkie doing their magic fraud on the public in favor of the banks and all their Wall Street capital cronies. And can it keep going? Absolutely. Will it come back down, and will there be a crash in bonds? Absolutely. When are those 2 points, or how is that going to play out? I don't know. So all we can work with is kind of price action, because typical technical metrics are going to be very useless in these types of fraudulently manipulated markets by the Fed and by the Treasury Department. So again, we're looking to get short again. Where? I don't know. If we can get another pop higher, that'd be even nicer. But I don't expect an enormous crash with the bonds. What I do anticipate is for the bonds to come back down and then go back up and then come back down and then go back up for quite some time, until maybe somewhere around June. All the way out here into June. I don't believe we're going to get a crash in the bonds straight from here all the way back down. I believe we're going to see more of a range action. Eventually the bonds will come back down, or the TLT will come back down to test this breakout point of 96, which at this point right now is again, on a percentage basis, worth the trade, man. There's some odd 20% from where that high is today, and it could even be more if the bonds keep going higher, down to the breakout point of 96. There's a 20% drop. That's juicy, and it's getting juicier. Problem is, I don't want to get squeezed trying to get some of that juice too early. So we'll see what happens. Let's see if this video posts. If you have any questions, if it does, please feel free to give us a call. And again, I'm going to leave it right here. I am short-term, give you the last word here, is I am short-term bearish the next 1 to 20 days. I am intermediate-term bullish the next 5 to 90 days. And I am long-term bearish the next 20 to 6 months, 20 days to 6 months. I am that's where that transition phase goes from intermediate to long-term. 20 days to 6 months bearish, from bullish to bearish. Okay, let's see if this posts, and I wish you all happy Hanukkah, Merry Christmas, Happy Holidays.